We're back. And now we're going to get into chapter 4, and we're going to break into chapter 4 into a couple of parts. I have a 212 section, a 312 section. My first focus is going to be on the 212 section, and then we'll do a little bit more elaborate discussion on chapter 4 as it relates to 312. Let's look at chapter 4, and chapter 4 gets into inventory. So before I get into inventory, I want to talk about inventory a little bit and discuss with you the dynamics of inventory. The first thing to remember about inventory is that inventory, as we mentioned, was one of the 5 current assets. All right, we talked about those 5 current assets: cash, accounts receivable, marketable securities, prepaid expenses, and inventory. Inventory we broke into 2 components. We said it was merchandise inventory and office supplies. In this chapter, we're focusing on merchandise inventory. When we did adjusting entries in chapter 3, we focused on office supplies. But in this chapter, we're going to focus on merchandise inventory. Merchandise inventory is specific for retailers because most retailers resell inventory that other people produce. When you go to Target, when you go to Sam's Club, most of those products are not Sam's or Target products. There are other people's products that Target or Sam's purchases and then resells those with a markup. They have a markup over that inventory and they resell other folks' products. So you can see most retailers use inventory as a method of selling and providing revenue for the company. And so as we mentioned the sale of a good, we're dealing with inventory as it relates to the sales of those specific goods for retailers. So when we think from the concept of retailers, we have to think in terms of what they are selling, how they are managing that inventory. Because as you know, we're buying and selling all the time. Also keep in mind, as you buy inventory, the prices of inventory changes. Sometimes you might, as a reseller, you might be able to buy a product that's $100. The next time, maybe months later, you buy the same product, it might be $120. Depending on how the demand is for that product, you may pay more or less for that particular product that you are reselling. So now we get into the dynamic and the difficulty of how do we manage the inventory that we're selling. And we're going to talk about different ways of managing that inventory and valuing the inventory. I just gave you an example, and in that example I said you bought a product for $100, then months later, same product, it cost $120. So we have different ways of managing the inventory and different ways of valuing that same inventory. Why is that important? Because the way that we manage the inventory will impact how we report that inventory both on the balance sheet and on the income statement. What do you mean? Is inventory both on the balance sheet and the income statement? Of course it is. When we dealt with a multi-step income statement, we saw there was a section when you got to gross profit called what? Cost of goods sold. What was that? It was the cost of the item that you're selling. In a retail setting, that cost represents that 100 or 120 that you purchased for the inventory that you sold. The sales price of that item, the cost of that item, the difference gave us the gross profit or the markup over that item. I gave you the example and I continue to use it. I sell watches. I sell watches. How much do I sell them for? I sell them for $1,000. How much does it cost me? It costs me $100. Therefore, I have a $900 markup or $900 profit on the sale of that watch. Same thing. So as you can see, the cost of sales represents the cost of inventory. On the balance sheet, we have inventory, which is the merchandise inventory that we have maintained in our warehouse. That represents what we have on hand. When it gets sold, a portion of that leaves what we have on hand and goes over to the income statement and becomes cost of goods sold. Now that you have that concept, we're going to move into this chapter and we're going to dive into a little bit more how we value and maintain inventory.